Alrighty, folks, as a real estate channel, we just had the current vice president of the United States and presidential nominee talk about an economic plan for housing. She talked about creating up to 3 million housing units. She also talked about some first-time homebuyer programs. And it is amazing how fast Lance Lambert is. He had a piece up on Fast Company yesterday talking about this. Lance, you're amazing, man. You have a gift.
Housing. And with that piece, I was up, I think, till 2 a.m. the night before when I kind of got some of the idea, found out what some of the things that were going to be in it and started kind of fleshing out the piece.
Yeah.
I don't usually like to cover a lot of this stuff. Resi Club, I want to be more of people's like data-driven gateway to the US
Of
housing
course.
market, kind of uncovering what's going on in the housing market, finding out how it varies across the country, and really less of the policy stuff.
Mhm.
But this was kind of a fun one because I was able to apply kind of my framework of how I kind of view housing through my reporting and what I've seen through data over time and my understanding of housing economics to this policy prescription, because I thought it was a great way to kind of give people a lens of how I see housing and maybe help them to develop their own lenses for how they view housing. So
No,
that's why.
I love the article. It really took, the plan, which we'll get into in a minute, or the pitch, and really took it down to actuals, because we've kind of seen this movie before. We have historical precedents to kind of unravel how this might happen if it comes to pass. I got to tell you, again, I think there's a lot of things in this plan that I think are net positive. For example, she's talking about having a $40 billion fund to empower local governments to fund local solutions. I've talked about ad nauseum about you got to do it at the local level, and
Yeah.
I don't know where the 40 billion is going to come from, but that's a different conversation. I think taking it down to the local level is a net positive. An expansion of existing tax incentives for builders to build rental housing that is affordable. I think that is a net positive. Creating a tax incentive to encourage builders to build starter homes, it would complement the Neighborhood Homes Credit Act. Again, net positive, right? Those first three things, in my opinion, are supply oriented.
Yeah.
Let's fix supply. I believe I've heard her say that she anticipates this potentially creating up to 3 million units. Again, net positive. And
Hey,
then,
hey, hey, Zuber, did I lose you?
nope, I can still hear you. The video is frozen, but we can still hear you
Yeah.
fine.
All good. Let's keep
Yeah.
rolling.
So again, net positive. She's focused on supply, but then, she comes in and says, "Hey, let's have a $25,000 down payment assistance program for first-time home buyers, which could help up to 4 million people." And that's where she lost me. So I recoil from any demand generation. That's not what we need, in my opinion, right now. But what you did is you broke this down in Fast Company, kind of with historical precedent. So why don't you kind of share your take on this? Because again, not a political take; it's an economic take.
Yeah. So during the pandemic housing boom, housing demand, we all saw it firsthand, rapidly took off, right? Amid the ultra low rates, stimulus, the work from home boom. The Federal Reserve estimates that during those first 2 years, from like summer 2020 to summer 2022, new construction would have had to increase 300% to absorb the pandemic era surge in demand. That's not possible. You cannot ramp up building like that. And so what occurred is there was far more demand than could be satisfied by supply, right? And so it quickly absorbed the active inventory, and it just kind of like sat on, like it literally like just stacking a bunch of weight on it, and it overheated prices is what the demand did. And actually a lot of that demand never even got into the marketplace because it just got bid out and there wasn't enough, supply for the demand, and that's why we overheated. And so the truth with housing economics is that supply, both up and down, is far more elastic than supply in terms of like the total housing stock. And a lot of the housing stock in the US is 60, 70. There's even homes 100 years old, right? You
Absolutely.
know,
Yeah.
the house I grew up in when I was real young was, born in eight or built in 18 something. Ohio, we have a lot of these older homes here. And so that supply can move much faster. So her campaign and her goal might be to build 3 million additional homes, which we'll get into that a little further in the discussion. But even if that was, even if there was a supply increase, the increase to the demand for that $25,000, incentive would happen immediately, right? As soon as that's in
Yeah.
the marketplace, you have a rush of demand. And so her goal is that there would be 4 million buyers over the course of 4 years. So let's just think of that as 1 million buyer per year, right?
Okay. Yep.
Actually get it. That's 1 in 5, right? And then not only that, there's a pool out there that's bidding on homes that doesn't even get in, that thinks they have that credit, and so they're out there shopping, right? So there's 1 million who actually have it, and then there's some others that are out there bidding. And so it's kind of hard at the moment to exactly quantify the exact impact. We don't have all the numbers, right? Uh, but this could also potentially be occurring into an environment where we're going from restrictive monetary policy to at least neutral, right? Because even if we're not in recession, unemployment's kind of moving up, disinflation, inflation's still decelerating. So the Fed's kind of changing its policy. So this could potentially be happening in an environment where you already have rates coming down, which could be problematic.
No, this is exactly the conversation I was having kind of in my head looking at this plan, and see that you had an article out within, I don't know, 12 hours is just amazing. And you're absolutely right. Demand will be sparked in an instant. Instant. Supply will be years out. And
Yeah.
we actually have a current example of this. I don't know if people realize that I believe the federal government was trying to build some EV chargers across the country, and they put all this money out. And I think in 3 years, they've done eight. They were supposed to do like 30,000 or something. They've done eight. That's just what happens when the government gets involved. It's slow. It doesn't happen. There's a lot of false promises. So again, think about this. You create an incentive, $25,000. I mean, I mean, that is going to take the entry level house, this supply. It's going to add a 4 or 5x the demand cycle,
And where
because,
in the market are we already the
yeah,
most balanced? It's that
uh,
entry level. And so my view here is, if this were to happen tomorrow, I don't know if that necessarily means that Texas prices and Florida's go up, right? Because they're already in a place where they're kind of sluggish, right?
mm-hmm.
But the thing that I feel very confident in is that at least the very tight active listing markets in the Midwest and the Northeast, these places that, like Hartford, Connecticut is still down 80%, the
Yeah.
metro. Those places, I think it could intensify it. Now,
Oh,
Southern
no,
California
no,
and
there's no
California,
could.
it,
It will.
and so the California markets, they're very tight in actives, but for those markets, the down payment size is actually
No,
pretty small.
no,
But
we're not talking New York, Miami.
yeah,
We're talking most of the country.
yeah,
Right. Most of
exactly.
the country, 25. I mean, the average home, I think what Zillow, the average home is 384,000 or whatever it is. Let's call it 400 grand. That's a down payment, right? Three and a half
Yeah,
percent is, well, I don't know, 15 grand.
yeah, yep.
And again, if
Yeah.
we're adding this to the entry level house, which again is already scarce, we're this could reignite inflation.
Yeah, and I'm the most worried again, these very tight active listing markets, Northeast, Midwest. And I'm not talking New York, Northeast. I'm talking like
No.
Buffalo, Rochester,
Right.
Syracuse, Burlington, Vermont. That's where the biggest concern would be. Now, I should point out that on the supply side, most housing analysts agree with Harris that the US housing market needs more homes.
Yeah.
Freddie Mac has an analysis that to get vacancy rates back to the historic norm, the US would at least need 750,000 homes in the purchase market and 750,000 homes in the rental market.
Mm.
additional. So 1.5 million homes. But here's the catch with it. To get the numbers to work, those 1.5 million had to come out and be vacant. So
Mm.
we need 1.5 million additional homes where nobody even lives in them just to get vacancy rates back to normal. So
Wow.
that's not just a conservative analysis. It's like an ultra conservative analysis. And so Freddie Mac's view for the housing market, and I'm saying based on their logic, it's very
Right.
conservative. Uh, and there, because there's some other places that start with a different framework, like Zonda thinks we're a million underbuilt. Moody's Analytics says 1.75, but using the Freddie Mac framework.
Okay.
And then if they actually give a number for the actual shortage, Freddie Mac says it's closer to 3.8 million units.
Mm.
Now getting into now this brings up another problem for Harris, is that not only would homebuyer handouts accelerate housing demand faster than housing supply, but the realities of supply capacity would also be a significant roadblock to increasing and having 3 million additional homes. So since 2000, and I can share my screen here to show this chart
Hmm.
if you're okay with that.
Of course.
Since January 2000, since January 2020, we've been averaging 1.3 million, essentially 1.4 million completed homes per year, housing units. That's apartments, that's single family, that's everything. About
Hmm.
1.4 million additional homes hitting the marketplace over the past 4 years. For Harris to get her goal of 3 million additional homes, we'd have to go from 1.4 to just over 2.1, because 3 million additional, that's 750,000 a year. So you need to
Wow.
have 750,000 additional completed housing units. That's just really hard to do because there's supply constraints on the market that have
Yeah.
existed forever.
It's yeah. Well, let's put some names on it in case people don't realize what it is. There's labor shortages. There's skill shortages. Lumber short. I mean, another 750,000 units. That's a lot of stuff. That's not sitting in a warehouse, folks. That is called inflation.
And the thing is that it's not just like, you can't wave a magic wand and there be more places where they build windows or more
Yeah. There's
a
not
bit.
just vacant factories. Yeah.
So just for lumber, framing lumber, there's a huge, massive supply chain network that's getting timber from Canada and all these different sawmills and finishing the wood. And there's just so much that goes into it and transporting it. And that's just one part, right?
Mhm.
Then there's the concrete, the windows. I mean, there's just so much that goes into the goods of the home, let alone the labor network that goes with it as well.
It would be so inflationary. It just would.
And so and then if you look back during the pandemic housing boom, there was a point where home builders attempted to ramp up quickly to meet the elevated housing demand, right? They were trying to build
Yep.
more homes faster, right?
Yep.
But what occurred is at one point they reached 1.8 million annualized housing starts. We never actually did 1.8 million in a year, but we very briefly got to that point where they were trying. And they literally just smacked into a supply capacity wall, and
I
the
remember.
prices just took off because it doesn't take that much extra demand for prices when you talk about pricing economics to just send it
Correct.
through the roof.
Yeah, there's not the slack in the system. There's like a 3 to 5% buffer for maintenance and whatnot. And once you go above that, the factories aren't there.
And so for lumber, we went up 300% and we're at 1,700 dollars per thousand board feet of lumber at the
Yep.
height. Or maybe it
Yeah.
got up to 1,800 in the futures market. It's $300 now.
Yeah.
Like it's
Yeah.
completely changed. But they soared all the way up to that top of their capacity, and they tried to go higher, and economics just shoved them back down.
Mm.
Um, and so I think big picture here, what can the US do to improve housing affordability? It's a really tough question, right? And I think of it a little bit like building a Lego structure,
Okay.
right? I
Mhm.
exactly know how to crash a Lego structure. That's really easy. You just walk up and kick it. And with
Yep.
housing, I think we understand how to break it further. Like that doesn't take a lot of thinking. It just accelerate subsidies that accelerate home buyer demand, right?
Yep.
Into an environment with not enough supply. Now, building the structure, building that Lego structure, that takes thinking, that takes thought, that takes time, right? And
Yeah.
so it's not necessarily a really clear, easy answer. And I think that that's what I have here is the uncomfortable truth is that improving housing affordability might not be as easy as, or as straightforward as people think. But some of
Yeah.
the ideas I have here are first, simply give the market time, right?
Time.
Time and make smart fiscal and monetary decisions, right? Time, smart fiscal decisions, smart monetary decisions. You know, if the bond market believes that we're not going to be running huge, massive deficits in the
Mhm.
future, that actually helps to alleviate
Yeah.
and lower yields. Like that's a small thing.
Mhm.
And if you do that right, over time, incomes rise and mortgage rates should fall some,
I
helping to
love
alleviate
this.
some of
I've
the.
been, you know, you've heard me talk about the broken housing market a lot, and I keep telling people the only way to fix this is time. It's years. You need incomes to increase, and it's not sexy, Lance. It's not sexy. It doesn't buy votes.
And so all of that helps to alleviate the historic housing affordability strain created by this very brief acceleration in pandemic housing boom demand and the ensuing inflationary and rate shock. And then second is probably focusing on, you know, the policies that do increase housing construction and supply capacity. Perhaps it is some of Kamala
Yeah.
Harris's current ideas, but do so without causing a sharp home buyer demand acceleration. So that's my view here. And I should also say that this story is written through the lens of housing affordability,
Mhm.
right? But in the purchase market. So the difference between prices, rates, and incomes, right? There's
Yeah.
another way to write this story from a home builder's perspective. They might not care if
Yeah.
demand soars, you know, and they're
Record
throwing.
gross margins, baby.
And if you're somebody who owns a lot of properties, and this is going to in the Midwest, single family, entry
Hmm.
level homes, this might not be bad for you, right? From a lens of like, you know, your
Yeah.
personal balance sheet. But so the
Yeah.
story here is taken from the framework of housing affordability.
At the end of the day, I like economics. I want the middle class to get stronger. I know it's not sexy. Just say we need, you know, we got a decade's worth of appreciation in 2 years. It's going to take years to fix the housing market. I will say I love the article in the Spin looking at the instantaneous demand generation without the supply. I will say if this goes through a version like this, it will be remarkably inflationary, both on asset prices, but also on inputs. This this plan as designed is horrible. It's horrible unless you're a builder or you own a lot of homes. If you own a lot of properties, this plan is amazing. But again, I am here for the middle class. I am here for people just getting started. It is not, I could, I cannot imagine $25,000 to help people get their first home. What that could raise property values 10 to 15% in a very short window, just
And
because of all the demand coming in at the low end.
and I should also point out that in the policy announcement, it doesn't say 25,000, it says on average 25. So
Average, average.
yeah, we don't know what the mechanism there for why some people are more, why some people are less, how high this goes. But the two things that we know, and so I wrote this whole story just based exactly on the words that were in their announcement that they provided to the Washington Post. It says on average 25,000, which would, you know, go to 4 million home buyers over the course of 4 years is the exact language. Now they say there's going to be some, you know, eligibility things. I believe one of them is that you have to be a renter who is in good
Paid their
standing,
rent on time. Yeah.
yeah,
Yeah.
something like that.
Yeah.
But knowing that they say that they believe that it will be 1 million per year over 4 years, we can already jump to, well, that's 25, that's 20% of the whole marketplace, right?
Exactly. Yeah.
And it's
Yep.
average of 25,000, which means you can actually just take the 25,000 and multiply it by the million per year, right?
Yeah,
And
of
so
course.
math in my head is every 40,000 people is $1 billion. So you can do the math, right?
Yeah.
Out of it. So it's not like they're
Yeah.
saying 25,000 is the max and most people are going to fall under that. They're saying 25,000 is the
The
average.
average. Yeah, it's an
Yeah.
important
And
caveat.
so that point, and then the fact that, reading around a lot of the other coverage from this, I just didn't think they had this other different take. That's why I wrote the piece. So I didn't do
Nope.
this piece, beat up on
No.
Kamala. I really just did it to have a different view on this, and also just to give people, an outlay of how I kind of view the framework of housing, and to point out that demand is far more elastic and can move much faster than supply. And if you go to the top of the story, at least on Resi Club, all the research that I talk about in the piece is all linked to. So if you want to
Beautiful.
about how supply isn't as elastic as demand, there's a piece there. You want to read about how, work from home elevated housing demand during the pandemic. And if you want to read the Federal Reserve's research on what drove the pandemic housing boom, it's all in the piece.
Yeah, you're amazing, Lance. Very well done. Great article. I think you took a very unique aspect, looked at the demand side and the supply side. I think that extra catch about how inflationary it would be to build an extra 750K homes has not been talked about by anybody else but you. It would be inflationary. The lumber mills, windows, concrete, labor. You're so right, Lance. You're amazing. Thank you for being here. Where should people go to get a part of Resi Club?
Yeah, if you want to sign up for the newsletter, go to resiclubanalytics.com, and you can just go there, drop in your email, and you'll get added to the list. There's also a premium tier where I do a lot more analytics down to 3,000 counties, 800 metros for home prices, days on market, inventory. And then every once in a while, I publish some stories over at Fast Company. And then, of
Very,
course, my Twitter, @NewsLambert.
yeah, must follow on Twitter @NewsLambert. Thank you, buddy. Take care.
Thank you.